One of the ways in which you can make money in the market is by focusing on momentum bursts. Momentum bursts are short term impulse moves in the market. When a stock suddenly finds buyer, then what happens is that buying attracts more buying for rest of the day, and it attracts buying for next couple of days, typically 3 to 5 days. And this is a very common phenomena in the market. And in order to see this in action, let's look at like say a stock like this INBX. Now if you look at this stock INBX, you will see that suddenly buying came in, and when the buying came in, you will see that the stock went up for 3 to 5 days, 14%, and then it again had a orderly pullbacks, and then again buying came in, and from buying it went on to make a move of around 40% in 5 to 6 or 7 days, or in this case 15 bars, right? This is a typical thing whenever you see buying coming into the market. Buying attracts more buying, and in order to make money from a momentum burst kind of a move, if you can find these kind of a moves at the start of the move, then you can profit from them. These are typically moves where you'll see that the stock will break out or will make a larger percentage move than a move which happened days before, right? This is a short-term phenomena in the market, and this particular kind of a short-term phenomena when you are trading, you have to be cognizant of certain things that this particular phenomena is not something which is for longer term trading. This is typically best for short term trading because many of these moves are not going to continue forever, or these moves after 3 to 5 days can end. And as a result, what you see is that if you don't take the profit in that particular time window, then the profit can evaporate very fast. This is another example of this kind of a recent move where you have this stock which had a breakout here, and in just a matter of 4 days it made a 15, 16, or like, and if you look depending on what you did, if you exited a 19% move in 3 to 5 days and not calculating the move on the first day of the move. So this kind of a phenomena happens uh, very frequently during markets where buying is coming in, like the kind of market which we are seeing currently, where there's been buying coming in. So here is a breakout, and after the breakout, in just a matter of 4 to 5 days, the stock went up 87%. Now, this kind of a moves, if you want to build your trading around, is something which is like what is called as momentum burst kind of a trading. And in order to profit from this kind of a momentum burst kind of a trading, what you need to do is you need to be basically focusing on scanning for these kind of moves, entering them early, because many of these moves on the day of breakout itself sometimes can make 14, 15, 20% move. And especially those of you who trade lower price stocks tend to make more explosive moves. So as a result, getting in early is very important in this kind of moves. Now, when you get into these kind of a moves, putting close stops is also important, because if your stops are too wide, then the risk reward ratio is not going to be in your favor. So typically, traders put stops of low of the day, or some more aggressive traders like me put a stop at half of the entry day, and then let the trade go up for 3 to 5 days and then take a profit. Now, here is an example of that kind of a move, a recent move, which is like, and it was a very good move. And this is Altimmune. And when you look at Altimmune, you will see that like, and it had this news event and then it had this move. But this was a tradable move because this was a breakout which happened, right? And in this particular breakout, what happened was the stock had a move, and in just 3 days, it made a 24% move. These moves can be very explosive if you build your trading around them, and if you can find and trade them successfully. The key to finding them is to have a well set scan which looks for this kind of a move, or look for a scan which looks for what is called as a range expansion, or impulse move, or a move in percentage term which is larger than any of the moves in the last 3 to 5 days. And once you identify these moves, qualify them using certain criteria so that you're not buying them on a second or third day, but you're buying on the day of the breakout. And then once you're in that move, It is just a question of managing their trade by moving your stops or using your trailing stops, or when the stock goes in your favor, a certain percentage, 20-25%, you taking partial profit and letting rest of the move, the rest of the stock continue to move. And these are the kind of things, tactics, which have been perfected by traders. This is not something new. This kind of a move has existed for many, many years. And with the commission being lower, this has become more popular way of trading, which is the 3 to 5 days time frame, or the 10 to 20% profit target kind of a moves. Now, how many moves like this happen in a year? Uh, there are thousands of moves like this happen. So your ability to capture 200, 300 of them is what is important. And that is where you can qualify those moves by selecting the one which have the highest quality. And that quality parameters might differ from traders to traders. Many traders, one of the quality parameters they use for selecting these moves is to essentially do this only on stocks which have already established trend, or something which has an established momentum, and then only try and capture the second leg of the move and not capture very extended moves. So that's one of the filter which you can use. The other filter which you can use is when you study these explosive moves of 3 to 5 days, is you will find that most of these moves tend to happen in certain sectors, technology, biotechnology, consumer discretionary. So you can also focus on finding moves in only those three sectors, which is technology, consumer discretionary, and healthcare or biotechnology. That's where more explosive moves tend to happen. That's where the profit potential is largest, right? The other way is like also capitalization. Smaller the capitalization, more explosive is the move. So if you look at stock, like, and if you go back and look at that stock like Altimmune, right? And if you see Altimmune, and if you look at this stock, it has a capitalization of 612 million after making this such a big move. So small capitalization stocks tend to have this more explosive move. As against that, if you're looking for a stock which has like basically a large capitalization, say like, and if you look at a stock like Tesla, its ability to make a 20% move in 3 days is going to be very low because it has 803 billion capitalization. Smaller the stocks, more likely you're going to find big moves, right? And explosive moves happen in stocks which have a smaller capitalization below 10 billion. And this is why you'll see that this kind of stocks make these kind of moves because the capitalization is very small, right? And basically, so that's again an advantage because most of the traders don't have such a big capital. You're not trading uh, tens of millions of thousand millions of dollars. So focusing on smaller capitalization is another quality parameter which is going to give you more bang for your buck in doing momentum build. The other thing which is important for trading momentum burst is also uh, the momentum burst are typically in an environment in market where buying is coming in. So if you are going to be trading momentum burst, you need to have some sort of a situational awareness filter because there are periods when everything which you buy is going to work in terms of like follow through. And then there are periods, every breakout which you buy is going to fail. So ability to put a filter of situational awareness on top of this is very important. And this is why I have this entire mechanism which I use, which is called market monitor, which looks at all the stocks making different kinds of whether buying is coming or selling is coming in. Now, if you see, based on this, I also publish a spreadsheet which many of you must have seen, which shows whether there's a buying coming or selling coming into the market. And I only trade these kind of methods when there's buying coming into the market, like the last 2 months, where that kind of a period where there's buying coming into the market. And if you can do this successfully, then you're going to find a lot of these kind of moves, which are going to be 2 or 3 days kind of a moves. And those moves can be very, very explosive in a short period of time without exposing your money to too much time period. You can find these 20 to 25% moves. And by doing lot many trades like this in a year, you can compound your money. So momentum burst is one of the methods by which you can find ways to make money in the market as a swing trader.